Good afternoon, everyone. I hope this email finds you well. And this is just a quick update. I've done these in the past. Every time that there is a prime rate or a Bank of Canada announcement, I want to keep you guys posted and just let you know what's happening. Because I think a lot of us at this point are still wondering when rates are going to be cut. It is coming. It will happen at some point. But I'm going to run through some information here that the Bank of Canada is watching very closely. And everything's heading in the right direction, but it's just more so just bringing you up to speed on kind of what's being looked at and the trends, that sort of thing. And then we'll just briefly look at, what is the anticipation for the prime rate and that sort of thing. So I'll walk through this just quickly and that sort of thing. But as of yesterday, the Bank of Canada has held their rates at 5%. So that's the overnight rate. The prime rate currently is 7.2. They're saying it's still too soon for rate cuts. So what are they watching and what are they looking at here? So really looking at inflation is easing, and you can see the rates are doing their job. The higher rates are actually working down inflation or bringing down inflation. So when looking at that from this perspective, as we look at the annual inflation rate, we look at the interest rates, is these are starting to do their job. Okay, so these higher rates are really getting into the economy, and they're definitely doing their job at this point. But inflation is being sticky, and we'll look at that in a second as well. So looking at bond yields, what happens here is this is how fixed rates are priced. Okay, and these are 5-year government bond yields. You can see way back in October, rates were much higher then. As the forecast of the prime rate begins to get more stable and more optimistic, these bond yields begin to drop. So we have seen a drop in rates, fixed rates that is, but we're still waiting for that prime rate to come down. And it's very likely that these rates will begin to fall as the prime rate begins to fall as well. Okay, which is why we're really, on the border right now of doing either a 5-year variable rate mortgage, so you can come down with rates. If you take a mortgage today, do you take a variable or you take a fixed? And it's kind of a toss up between a 3-year fixed and a 5-year variable. But if you have more questions on that, please let me know. GDP, you can see here is the economy is not producing at levels. It's really slowed down over the past couple of years or the past year or so. So this is what they want. They want to slow down the economy, and that is working. The consumer price index, so the consumer spending is leveling off as well. Okay, so it's not growing. So that's a good thing. In Canada's employment rate, it has come down a bit, but they're watching this very closely to see, what is happening. I think this is going to increase because of this, and this is something they're watching very closely as well, is business insolvencies and corporate bankruptcies. I know this is small when looking at the screen, but you can see this has skyrocketed this year, and you can see it's really increased significantly for bankruptcies. I think that'll eventually take a toll on this, and unemployment will rise, unfortunately. As for the inflation rate, it has been, I've used the reference of roller coaster quite a bit, and it has been a roller coaster. And this is what's really sticky. Okay, so right now we're sitting in January of inflation 2.9. It came down from 3.4, and it was anticipated to actually not come down that much. So the more we see this level off, the better. We are now within that 2 to 3% range. But what the Bank of Canada is concerned about is it being sticky. Will it bump back up if they start lowering rates too soon? So what is the forecast at this point? The forecast at this point is we're anticipating by the end of this year, the prime rate to have fallen by either up to 0.75% to even up to 1.5%. And that'll likely happen in the latter part of this year. And that's the forecast. In the following year, it's supposed to come down another 1 to 1.25 in that range. So a lot of it depends on sticky inflation and what's happening to these numbers, but the rates will eventually come down But for those of you, and I've mentioned in the past that if you're having any challenges, if you need anything, you just want to chat or run through any details, anything you're concerned about, if you have your mortgage coming for renewal this year or next year, if you're concerned about that, we've reached out to many of you out there. If anyone or any of your family, friends, or colleagues need help or recommendations on what to do, we're here to help. As always, let me know if you need anything, and look forward to chatting with you again at some point, and we will keep you posted. Have a great day. Bye for now.